So, day trading. Is it a shortcut to riches, or is it just a financial trap waiting to spring? It's one of the most heated debates in all of finance. So today, we're going to cut through all that noise and see if we can find a real answer.
Okay, so let's just get right to the heart of it, the big question. Can you actually consistently make a living day trading stocks? Because it feels like for every incredible success story you hear, there are, I don't know, a dozen horror stories about people wiping out their entire accounts.
So to really get to the bottom of this, here's how we're going to tackle it. First, we'll look at the case for day trading. Is there a truly profitable strategy out there? Then we're going to decode that strategy. It's called the ORB. After that, we flip the script and look at why so many people say trading is a hazard to your wealth. Then we'll tie it all together with this idea of a zero-sum game. And finally, we'll land on the big takeaway.
All right, let's start with the optimistic view. Let's look at the case for day trading and a specific strategy that, honestly, on paper, looks like an absolute money-printing machine. Now, this comes from a brand new academic paper, just out in early 2024. We're talking researchers from the Swiss Finance Institute, so these are serious folks. And they didn't just theorize, they actually backtested a very specific strategy on thousands of stocks over a solid 7-year stretch. And wow, just look at this. This chart shows their main finding. If you started with 25 grand and followed their strategy, it would have mushroomed into over $400,000. That's a return of over 1,600%. For comparison, if you just bought the S&P 500 and held on, you'd have made just under 200%. I mean, it's not even close. And when you dig into the numbers, it gets even more impressive. I mean, an annualized return of almost 42% is just huge. But check out the Sharpe ratio. That's how you measure return for the amount of risk you took. At 2.81, it's more than 3 times better than the S&P 500. And the alpha? That's pure profit that can't be explained by the market's movement. A massive 35.8%. Seriously, most professional hedge fund managers would kill for numbers like these. Okay, so the big question is, how on earth did they do it? What is this magic strategy? Well, let's decode it. It's called the opening range breakout, or ORB for short.
So the basic concept behind the ORB is actually pretty straightforward. You just watch a stock for the first few minutes of the day. In this study, they used 5 minutes. You mark the highest price and the lowest price in that little window. The whole bet is that whichever way the stock breaks out of that range, up or down, it's going to keep going that direction for the rest of the day.
But, and this is the crucial part, here's the secret sauce the researchers discovered. This strategy didn't work on just any old stock. No, they focused only on what they call stocks in play. These are stocks that have way more trading volume than usual, right from the opening bell. Why? Usually there's some big news, like a surprise earnings report. This little filter, this one idea, is what turned an okay strategy into a monster.
So here's the full playbook. Step 1, you find those stocks in play with huge volume. Step 2, you mark the high and the low of those first 5 minutes. Step 3, and this is important, you only trade in the direction of that first breakout. Step 4, you use a really tight stop loss that's based on math, not emotion. And finally, step 5, you are out of the trade by the end of the day, period. No holding overnight. It's a very clear, very disciplined, rules-based system.
Okay, that sounds amazing, right? A 1,600% return with a simple set of rules. So why isn't every single person on the planet doing this and getting rich? Well, this is where we have to look at a completely different side of the story. Welcome to the other side of the day trading argument. And yeah, this quote pretty much sums up the conventional wisdom you hear all the time. Day trading is a scam. It is a get-rich-quick dream being sold to you by webinar hucksters. The idea here is that those success stories we see are massive outliers, not something you can actually replicate. And the people on this side of the argument, they have a number to back it up, a really, really big and frankly kind of scary number if you're thinking about trying this yourself. Here it is. It's not just one study. We're talking multiple academic papers stretching back years that all come to the same brutal conclusion. Over 97% of individual day traders lose money. They just fail. They don't even do as well as someone who just buys a simple index fund and forgets about it. Maybe the most famous paper on this is by 2 professors, Barber and Odin, and the title says it all, Trading is Hazardous to Your Wealth. Their findings were just so clear. They found that regular investors trade way too much, mostly because they're overconfident. And here's the real kicker. The people who traded the most had the absolute worst results. Their conclusion was blunt. Trading is bad for your financial health. So we have a huge problem here, right? A major contradiction. On one hand, a 2024 study shows a strategy that returns over 1,600%. On the other, decades of research say 97% of traders fail. How can both of these things be true at the same time? Well, this is where it gets really interesting, because it turns out it's not a contradiction at all once you understand what kind of game day trading really is.
So let's just state the puzzle clearly. How can one very specific system be so unbelievably profitable when almost everybody who tries this stuff goes broke? What is going on here? Well, the clue might come from another study by researchers named Garvey and Murphy. And their big idea is that we've been thinking about this all wrong. Day trading, they say, isn't a game you play against the market. It's a game you play against all the other traders. And this table from the research just makes it crystal clear. This shows the money made and lost on the exact same stocks, but it's split between the winning traders and the losing traders. Just look at the first line, the stock RMBS. The profitable group made almost $500,000 trading it. At the same time, the unprofitable group lost over $665,000 on the exact same stock. One group's profits are basically the other group's losses. And the researchers found something really specific. When these traders were forced to trade against the big pros, the market makers, basically everybody lost money. But when they traded on what are called ECNs, electronic networks, where they're essentially just trading against each other, that's when it became a zero-sum game. The money wasn't created or destroyed, it just moved from one trader's pocket to another.
And that brings us to the big aha moment. The skilled, the disciplined, or hey, maybe just the lucky traders, the 3%, they aren't magically beating the market. No, they are taking their profits directly from the pockets of the other 97% of traders who are less skilled, less disciplined, or just plain unlucky.
Okay, so that was a lot. Let's put all of these pieces together and figure out our final takeaway. So here's what it all boils down to. Number one, yes, it is absolutely possible for a very specific, rule-based trading strategy to be incredibly profitable. That first study showed us that. Number two, it is also a fact that the overwhelming majority of people who try day trading lose their shirts. And number three, the reason both of these can be true is because day trading isn't like investing. It's a zero-sum game where the small club of winners gets paid directly by the very large crowd of losers. It's not a game against the casino. It's a game against every single other player sitting at your table. And so that leaves us with one final, really important question for you to think about. Knowing everything we've just discussed, is day trading a game that you're prepared to play?